Here we go with some questions on economic and business measures. We are going to quantify, we are going to calculate, we are going to work with some great math, nothing too crazy, right? The wild, disgusting math is more so in our cost accounting and financial sections. These are just more basic formulas that we need to know that apply more so to our economics. The following information is available for economic activity in year one. All of these are in billions, so 60 billion, 40 billion, 30 billion. Just make sure you read those instructions. Financial transactions, secondhand sales, etc. Got a couple items here. I just want to read the question first because the question says, what amount is the GDP for year one? Now, step one for here is to have the GDP formula memorized. That is our prerequisite for answering this question. And if you don't know it, here is a great time to practice it and get that down in your memory. We are going to calculate using the expenditure approach here. Now, we do have the expenditure approach and the income approach. And which one do you use? Well, both are valid approaches. However, you need to look to see which pieces of information are available, and as such, which can you use, right? Like, just like if you remember from, and if you've taken it far with our cash flow statement, and within that we have the direct and indirect method for calculating operating activities. Both are valid methods. You just need to, and both get you the same answer. You need to see what information is provided to you, which can plug into each respective formula or process. In this case, it's going to be the expenditure approach, and I'll show you because the expenditure approach formula, this is going to include all governmental spending. So it's all governmental spending plus investment by private industry plus consumer spending plus exports net of imports. Again, what is all of this? This is all our essentially production. Like, what is the value of your country? This is the essentially the best way to value the net worth of a country. It's not perfect. It's probably far from perfect, but it's what we got, and we're going to do our best with it. Now, let's pop through our information, see what we can fill into our formula. Well, let's see. We've got investment by businesses. I see that. Investment by private industry, I'll put 20 billion there. Okay, and just plug and chug, right? Fill out the formula. Net exports, I see that one as well. So net exports is net of imports. I'm going to populate a 10 billion there. Consumption by households, that seems to indicate our consumer spending. And secondhand sales, that as well will be involved in our consumption by households. And what are secondhand sales? Well, let's say I buy something from Amazon and then I sell it to someone else. Now, you might be thinking, how can the government accurately measure that? And I mean, it probably can't. It's pretty difficult to, but there are estimates, right? You sampling and data, and you have to make an estimate based on a sample. So that's kind of how they would do it. But consumer spending here in total is going to be 40 and 30. So this is consumption by households, right? This is household going to the grocery store, spending money on airlines to visit their family, all of those possible transactions, plus secondhand sales for a total of 70. Now you might think it's weird. We don't have government spending here, and that's probably, and it will be a big part of many questions in the future, but questions may not have it, and that's fine. You just need to be cognizant of that. It's just excluding that for this purposes. We have to go off of what we have, and that's why it's super important to memorize the formula. That way there's no doubt about what needs to be included. Do some simple math here. We've got 20, we've got 10, we've got 70. Add these all together for the beautiful number of $100 billion. That is the GDP of this country. Awesome. Great question there. Let's move on. Now we've got our CPI. And the CPI formula, so I see the CPI. I'm reading the question, I see that. Before even reading anything further, I want to write out the CPI formula. Right? This is practice to drill into your mind the fact that this test is the most formula-heavy test out there, and it's not a bad thing, because if you memorize these formulas, these are all free points in the exam. You don't have to stress and think about it. If you just memorize these formulas, it'll just come to you. Now, the CPI formula, another way to say that is that's the percentage change formula. And that's a formula You probably learned in high school, at some point in college. If you don't remember it, that is totally fine. We're going to go over it here. The percentage change formula. You can use this for pretty much anything. If I want to calculate my gain on a stock, I can use the percent change formula. In this case, so let's say I'll put it in stock terminology. Maybe that'll help, but I'll also talk about it in CPI terminology. 136.50 is, and this isn't dollars, but I'm putting it in stock terminology, but same thing, right? This is the new stock price. So in year 2, my stock went up to $136.50. It was 131, and then we are going to divide this by 131. Another way to say this formula is new minus the old divided by the old. That's the percent change formula. That's how you calculate your gain on a stock, right? And similarly, that's how you calculate your CPI. Now, these are the right numbers. Obviously, we're not going to have a dollar sign for our CPI. We are going to do the math here. Give you a second to do that math and figure it out. Super important to practice it yourself. Make sure that you are used to your calculator and not messing anything up there. Going once, going twice. All right, sold to the person who said you were going to get 0.041984. I'm writing this out pretty in depth because for the exam, you need to write out and use the longest number without rounding it. You round it at the very end. That's the good general rule to not mess up with any rounding errors. Just keep the numbers as long as you can. Then it goes 7.3. So the full number there, that's what I have in my calculator. Don't round until the very end, otherwise you might lose points due to a rounding error. And for the CPI, it's a percentage, as you can see. This is not a percentage. This is a number. It's a decimal. So we just multiply it by 100. And that's officially part of the CPI formula, right? Is you need to multiply it by 100%. But think about it as well. It just makes sense you'd have to do that. So we move the decimal point 2 slots to 4.19. What does that round to most closely? I think it rounds to 4.2. And that will be our final answer. Cool. Awesome. Great question there. The discount rate set by the Federal Reserve is which of these? We've got 4 definitional based answers. Let's see what we've got. Is it the rate that commercial banks charge for loans to the general public? This one, no, not at all, right? The Federal Reserve is a central bank. It's not the rate that commercial banks charge at all. It's not. So that's going to eliminate A and C. From there, we've got B and D left. Now, the rate that the central bank charges for loans to the commercial banks, that very much sounds like a proper answer. However, letter D as well, let's see. This is the ratio of a bank's reserves to its demand deposits. So this is the reserve requirement ratio. This is something, but it's not going to be our answer here. This essentially says, all right, we need to keep more cash on hand as a bank because the Federal Reserve says so. And we can't go out and loan it to anyone or spend it. We need to keep, let's say, 20% of all the money that customers give us on hand, so to prevent a bank run. Letter B is the final answer. It is the definition of the discount rate set by the Federal Reserve. And that's the discount rate. It refers to that Federal Reserve short-term loan rate that it makes to its member banks. The Federal Reserve gives money to the banks give the money to the people. If the discount rate increases and the money rate decreases, right, we are going to see deflation, which deflation is not a bad thing. There's a time and place for both inflation and deflation. This is a way for the monetary policy of the Federal Reserve to manage that. Last up here, which of the following types of unemployment typically results from technological advances? I'm just going to go through them all and tell you which refer to which type of unemployment. Now, first off, I just want to say short-term unemployment, it's not really a thing. I mean, it is a real term, right? Short-term unemployment. I mean, if we have unemployment for 3 months of the year for a certain reason, sure, that would be short-term unemployment, but that's not an official type of unemployment we're going to be talking about in our exam here. Okay, well, let's see. What are our possibilities? Cyclical unemployment. This results from declining GDP. Does that indicate anything here in the question? I don't think so. We're going to cross that off. So declining GDP means this is probably from a recession. Structural unemployment, well, this one is going to be a result of when the skills of certain individuals do not match what is in current demand, because there have been, hint, hint, nudge, nudge, certain technological advances. We've got a bunch of truck drivers, and all of a sudden we've got a bunch of self-driving trucks. That is going to be an example of real structural unemployment. That sounds like a pretty solid answer. However, let's see, letter D. Frictional unemployment is just simply normal unemployment, right? There's always going to be frictional unemployment. You can't stop it. Hopefully it's pretty low, but there's always going to be frictional unemployment. It's just the standard, okay, at this time there's unemployment and we'll deal with it, right? Because that comes from people just looking for jobs. I might quit my job because I'm looking for a better job. It doesn't mean I'm technically unemployed and I can't find a job. So it's not necessarily bad. It's just the normal amount of unemployment we'll see in the economy. Final answer, letter B, structural unemployment. Awesome. Great questions here on our economic and business measures. Keep going strong, everyone. I believe in you, and you can get this test done. Hey there. Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material. We'll do it together. Tap into the power of CPA.Examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.